Hello everyone, this is Vaibhav Bansal, host of this session and founder of Tax-o-phile. Today we are having CA Vaibhav Aggarwal sir, who is a chartered accountant by profession. He is also practicing in the field of corporate taxation profile in a Delhi-based firm. He has authored several articles for Tax Group, Taxman, and ICI Member General as well. We heartily welcome you, sir.
Thank you, Vaibhav, for the such warm welcome.
Today we'll be having a session on taxation of cryptocurrency. This section has been introduced by Finance Act 2022 with effective from 1st April 2022. So let's move on this session first. Yeah, over to you, sir.
Yes. Overview of Section 194 is the Finance Act 2022 has inserted a new section 115 BBH, which is effective from 1st of April 2022, wherein any income arises from any transfer of VDA. It will be taxable at a rate of 30%. Okay. Further, in order to compute the capital gain under this section, only the cost of acquisition will be allowed as deduction from the total sale consideration. So any other expenditure like brokerage, commission won't be able to set off from the total consideration amount. In addition, the Finance Act 2022 has also inserted a parallel provision with this section as 194S, wherein any person responsible for paying any consideration for the transfer of VDA will be liable to deduct TDS at a rate of 1%. Further, there may be chances where the taxpayer may suffer a loss due to transfer of VDA. In such a scenario, such loss will not be able to set off, nor such loss will be able to carry forward in the future year. Hence, any such loss will be treated as dead loss, and it will be as a total loss for the assessee. Okay, so in the next slide, we have made certain situation for making this section more simpler to our viewers. So in the first case, with the Mr. A selling the Bitcoin amounting to rupees 6.5 lakhs, whose cost of consideration was 3.5 lakhs. In this case, the total gain amount under this section will be 3 lakhs, and the tax rate applicable here will be 30%. So one point that should be considered that no other allowances should be allowable as a reduction under this case. The second one, whether Mr. B sold Dogecoin worth rupees 75,000, whose cost of acquisition is 2,25,000. In this case, the Mr. B has suffered a loss of 1.5 lakhs, 1.5 lakhs. In such a scenario, the loss of 1.5 lakhs will not be able to set off, and it will be treated as debt loss. In the case number C and the case number D, where there is a gain of around 30,000 for the sale of tether. In this scenario, the loss of Shiba will not be set off from the gain of tether. Okay. So here the total gain amounting on the sale of tether, that is 30,000, will be taxable at a rate of 30%. In the case number D, where there is a gain of rupees 60,000 for the sale of Bitcoin, and there is a loss of 35,000 for the sale of Dogecoin. In this scenario, the loss amounted to rupees 35,000 won't be able to be set off from the income of Bitcoin. So the total gain of the Bitcoin will be taxable, that is rupees 60,000, and will be taxable at a rate of 30%. So over to you, Vaibhav.
Okay, thank you, sir. Till now, you have learned about the section 115 BPH, how it computed the taxable liability. Now we are heading towards the section 194X, which talks about the TDS liability. where in the transaction of cryptocurrencies, the CBDT has also imposed certain TDS liability that the buyer and the seller, where there is a transaction of cryptocurrency, then the seller has to deduct TDS on the transaction of cryptocurrencies. Whether the payment is in the transfer of where the consideration of transfer of BDAs, virtual digital assets, are either in the kind or in cash. If it is in kind, then the TDS liability has to be deducted by the seller itself. If it is a combination of both, kind or cash. So see whether the cash is sufficient to meet the TDS liability. If it is sufficient, then pay from it. If it is not sufficient, then the liability will be imposed on the payer itself, that the TDS has to be deducted and to be paid to the government. Then, before transferring the virtual digital assets or the cryptocurrencies. In this case, the TDS will be deducted by the specified persons or the non-specified persons. CBDT has classified the specified persons and the non-specified persons. In the under the specified persons, CBDT has further classified in two categories, where the individual or HUF does not have any PGBP income. It will classify as specified person, and another if they are having PGBP income. So if their total sales or turnover are not exceeding rupees 1 crore or 50 lakh for the profession in the previous preceding year. In this case, if you are if you are transferring your virtual digital asset for the financial year 23-24, so the turnover limit, the 1 crore turnover for the business and 50 lakhs for the profession, you have to see for the previous financial year, that is the 22-23. If there is a if you are transferring 23-24, then you have to see for the 22-23. So if the payer is the specified person, as mentioned just now, then the TDS liability will be applicable for the payments more in aggregate. The payments, the total aggregate payments, if exceeding to the 50,000 limit during the previous year, during the financial year, then the TDS liability has to be deducted by the payer. And for the non-specified persons, the limit is 10,000. That the 10,000 limit is exceeded in the aggregate during the financial year, then the payer has to deduct the TDS. In this case, the CBT has also clarified on certain items whether these items will be classified as a virtual digital assets or no. So the CBT has clarified by a notification on 30th June 2022, whereas it has clarified that these items will not be classified under the section 247A, the definition of virtual digital asset, and hence the tax liability under section 115 BBH and 194S will not be applicable. These items are gift cards, vouchers, that you earn from basically from Amazon Primes and then Netflix, Flipkart, Myntra, where if these gift vouchers or gift cards are used to purchase the goods or services or redeeming them for obtaining the discount on goods and services, then these will not be classified under the definition of virtual digital assets. Then further, mileage point, reward points, loyalty points, incentive, rebates, promotional programs, anything like these by whatever name called. If they are redeemed for the obtaining goods or services or obtaining goods or services at discount, then it also not be classified under the definition of virtual digital assets. Hence, no section will be applicable. Third is the subscription to website or platform or application like Netflix, Amazon Prime, Disney Hotstar. The subscription of these websites or any other websites, not just these websites only. There could be any website from which you are obtaining the subscription or the platform or application to use. Then these subscription or application will not be counted as a virtual digital asset, and hence there will be no TDS liability on these accounts. Now, I would request C. Vaibhav Aggarwal sir to please enlighten us on the CBDT circular, which has clarified upon the certain FAQs. Over to you, sir.
Yes, Abhav. So there was a lot of ambiguity among the taxpayer along with the tax professional. Then in cases where the VDA are being exchanged over the marketplace exchange, so will be liable to deduct tax. In addition to this, there may be cases where the transfer is taken in kind also, sometime in cash. So how will the whole procedure will take place? So in order to remove the difficulty of the taxpayer and the tax professionals, the CBDT issued a circular number 13 of 2022 dated 2022 June 2022. So in the first case where any random person sells the VDA to the buyer, in that case, the exchange will be liable for deduction of TDS at a rate of 1% under Section 194S. In the situation number two, where the broker is selling to another person, in this case, exchange will also be liable for deduction of TDS, as in case number one also. In the case number three, instead of selling directly by the exchange to the any other person, here the broker is involved. In that scenario, the exchange, along with the broker, will be liable to deduct TDS. However, considering the hardship of the taxpayer, in this case, the CBDT has allowed, like uh, they have inserted a clause where where all the parties to the contract can enter into an agreement, which says that the broker will deduct the TDS only. So in this case, exchange will not be liable for the deduction of TDS, and only the broker will deduct the TDS. In the case number four, the exchange will own the VDA. So in this case, the exchange will be seller to the any other person. In this case, the buyer will be the responsible person for deduction of TDS. However, considering the hardship of the buyer, in this case, the exchange can enter into an agreement with the buyer where the buyer will be exempt for deduction of TDS, and in this case, the exchange will be liable for deduction of TDS. Further, in this case, the exchange will also have to file a quarterly form, that is form number 26 QF, where it is a challan come return, where the exchange will have to report such kind of transactions. Over to you, Abhi.
Yeah. If there is another situation where the seller is any person or the buyer is also any person, so is the broker involved in this situation or not? So the CBDT assume that there is no broker involved in this transaction and the transaction taken place with kind. No cash is also involved. So the TDS should be deducted by the buyer or seller or the exchange. Buyer or seller directly can deduct the TDS if they have they are the primary liability on the buyer and the seller. But if they have the agreement with the exchange that the exchange have to deduct the TDS of this transaction, that the exchange have to deduct the TDS. And if we come on the another situation where the seller is a broker, if there is any person who is purchasing the cryptocurrencies directly from the broker, not from the seller, then in this transaction the buyer or seller, like the broker or any person will deduct TDS upon the clarifications or the liability to deduct TDS. Whereas if there is an agreement between the exchange and the some parties involved that that the exchange will deduct the TDS on this transaction, then the liability to deduct TDS shall be on the exchange itself. In the next situation, whereas the buyer is any person and the seller is also any person, broker is involved in this transaction, then if the primary liability will be on buyer and seller. If they have the agreement with the exchange, then exchange have to deduct. But in the situation, there can be also possibility where the exchange have the agreement with the broker. Then that broker have to deduct the TDS on this transaction. Then the broker has the liability to do the TDS. If there is no transaction between the broker and the exchange, then the liability of deduction of TDS will be on exchange if there is an agreement. If there is no agreement with the exchange and broker, then the liability will be on the broker. Now exchange is the seller and buyer is any person. Then who will deduct TDS will be the exchange and buyer. The same logic will appear. TDS liability will have to be deducted by the buyer if there is no expressly agreement. If there is an agreement between the buyer and the exchange, then the exchange have to deduct the TDS with no doubt. If there is an agreement, then agreement what agreement says is to be followed. If there is no agreement, then the liability to deduct TDS is on the buyer or seller, as the case may be. This is the final crux of this circular. Then there are other some FAQs that I would like C. Vaibhav Aggarwal sir to please enlighten us on these issues.
Yes, above. In addition to fact we have specified above, there are certain other FAQs which have circular mentioned. The first one is where the payment is being made by the payment gateways through the gateways, whether they will be liable to the TDS or not. So under this, the circular has clarified that where the TDS has already been deducted by the specified person or by the required person, that can be exchanged by or on any person. In that case, the payment gateway will not be liable for reduction of TDS. The question number two will be whether the consideration on which the TDS should be deducted it should be including GST or commission or not. So they have clarified that it should be net consideration after excluding of GST and other charges like commission, brokerage, etc. The question number three is in case where the provision of section 194Q is applicable, so whether there will be applicability of section 194S or not. So the CBDT circular has clarified that where the 194S is applicable, in that case, no TDS is to be deducted under section 194Q. For the question number four, it is specifying the threshold limit for the deduction of TDS under section 194S. So as specified by the Vaibhav Bansal in the starting slides, the limit for the deduction of TDS will be rupees 50,000 for the case of specified person. However, in the case of any other person, it will be 50,000. Okay, over to you, Vaibhav.
Yeah, so actually this is it for our session, but we have certain queries from our users, from our subscribers. So I would like to please answer those queries. Like first query is whether there'll be any methodology or there is any way to compute the cost of acquisition for which the deduction is to be taken.
Okay. Yes. So no, the section, no, the CBDT circular specified any methodology. However, the rates that are being traded at exchange or the marketplace are already at a fair market value. So in order to compute that value, we can refer to the values appearing at the exchange or marketplace.
Okay. The next question is that this section is applicable from the 1st of April 2022. So whether there is any loss incurred by the uh, buyer or the seller for the till 31st March 2022. So there will be any deduction or set of carry forward will be applicable for these losses?
No, the same provision will be applicable. In case the assessee has incurred any loss prior to 31st of March 2022, such loss will be treated as a dead loss only, and no carry forward or set of such losses will be allowed to the assessee.
Okay, sir. Rebate under Section 87A will also not be applicable, na?
No, 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 no. It will not be applicable.
Okay. If there is, suppose, sir, if there is any common expenditure that the individual is involved in the business activity as well as the trading in the cryptocurrencies, so if it incurs a common expenditure, then the expenditure which is apportioned to the cryptocurrencies, whether that expenditure shall be allowed.
Okay, so the section 115BBH has specifically mentioned that only the cost of acquisition will be allowed as reduction. Therefore, no other cost like brokerage or commission will be allowed as reduction. So here only the cost of acquisition will be used for the allowance from the total sale consideration.
Okay. And the last question is, sir, whether if there is a situation whether where 194O, section 194O and 194S both are applicable on a certain transaction, that then buyer have to deduct TDS on both the section, or there is explicitly a section that we have to deduct over 194O or 194S.
So under this case where the section 194S is applicable, so under this, the assessor is required to deduct TDS under only 194S, not under 194O. It is specifically mentioned in the section only that TDS has to be deducted under section 194S only.
Okay, so these are all the doubts from the users or the subscriber of our channel. So we are happy to clear all those doubts. Thank you so much for joining our session or viewing on our YouTube channel. We hope you like it, and please do subscribe our channel for more updates. And thank you, Vaibhav Aggarwal sir, C. Vaibhav
Thank
Aggarwal
you.
sir, for giving his precious time for this session. Thank you, sir.
Thank you. Thank you.